All right, guys, today, so we're going to talk about some methods that are 100% completely free, and they're probably the best methods for you to build up your credit. Now, credit is I can't stress how important having good credit is. You know, good credit is going to help you with everything from, you want to buy your first house, you want to invest and start buying rental properties to start your journey to financial independence and financial freedom. Things like leasing a car. And in some cases, it's even going to be good or bad, or, can be a big detriment when you're getting a job. So making sure that you have good credit is paramount to your success in so many ways. And when you have good credit, you're going to get many more doors open, many more opportunities. You're going to save a ton of money when it does come to wanting to borrow money in whatever fashion you decide to do that. So coming out of the gate, one of the smartest things you can do is get a credit card. Now, there's a challenge. There can be a challenge there. When you don't have any credit, the challenge of getting a credit card can be really big, because these companies look at your credit score and they say, "Well, I'm not gonna give you a credit card. You have no credit history. You haven't proven to me or to anyone else through your credit score that you can pay back any money you borrow," which is essentially what a credit card is. You're borrowing money from someone else to purchase something, and then your credit score tells them whether you can pay it back. It's essentially a scorecard on how fiscally responsible you are. So there's going to be a bonus method towards the end of this video, so hang around. We're going to give that bonus method. But in the meantime, don't forget to hit that like button. Really does help out with the algorithm. And if you want, you can just give it a little tap. You can hit it really hard. Do whatever you want, but really helps me out, helps with the Google algorithm if you do hit that like button. But back to the subject at hand. So the first thing you want to do is get a credit card. Now, like I said, it's going to be very difficult if you have no credit to get that credit card. But what you can do is you can go and you can get what's called a secured credit card. That secured credit card is basically the bank is going to take a chance on you by giving you this credit card, but in turn, the bank is going to say, "You're going to give me some collateral." And that collateral is going to be in the form of money. They're going to ask you to deposit X amount of dollars, whether it be, $300, $400, $500 into an account that is going to be the collateral on that secured credit card that you're going to get from them. And what this allows them to do is this allows them to say, "Okay, fine, we're going to trust you with this, and you can go out and you can charge things on this credit card. And as long as you pay it back, you're going to take and you're going to continue to build up your credit. But if you don't pay it back, we've got your money that we can then use as collateral to pay off that debt that you may run up." So if you decide, you know what, I'm just going to go on a shopping spree, charge this up, spend, a bunch of money. Well, $500 isn't really that much money, but if that's what you want to do, you're not going to get away with it because they've got your money as collateral that's then they're just going to use to pay off that credit card. Now, obviously, we don't want to do that stuff because that's not what this video is about. It's actually, we want to be building up your credit, not knocking it down. So once you get that secured credit card, every single month, every single week, anything that you would normally pay cash for, if you're going to go to Starbucks, you're going to buy a coffee. If it's your turn with your buddies to, pay for drinks or buy a night of dinner out or whatever, you're going to charge that on that card. But here's what you're not going to do. You're not going to go and spend money on that card that you wouldn't normally spend. This card is for one reason and one reason only. It's to build up your credit. And that means that you're not going to live beyond your means while using this credit card. You're going to charge things, and every couple of weeks or on the due date, which is fine, you're going to pay off the balance in full. And what is that going to do? Over the course of time, about 6 to 8 months or so, your credit score is going to start to build up. Build up, build up, build up. Next thing you know, you're going to have, 550, 575, 600. Around that time, you'll start to actually get offers in the mail from other banks that are going to start to say to you, "Hey, you look like a good lender or a good person to lend money to. we're going to offer you this card at this APR, blah, 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 blah. But hang tight, because you're going to want to be a little bit choosy, because some of those first credit cards that you're going to get offered, unsecured, we'll call them, they're not going to be your best choices, because they're going to come either with, high APRs or high annual fees, stuff like that. So after you've built up your credit for a little while, then once you start to get the really, really good offers, then you're going to think about choosing one of those. But I do want to give a recommendation. Now, so for your secured credit card, I do recommend one card, and there's a reason behind that. That's the Discovered It card. And it's a secured credit card from Discover. The reason I recommend it is it actually gives a cashback reward. Now, cashback rewards and rewards of all kinds are very common practice with credit cards. And they're something you should get used to using, because one of the great things about them is you can get things like cash, you can get things like points that you can use to go on vacation, pay for hotels, pay for stuff on Amazon.com. Whatever you want to do with those points, you can use them for, depending on if they allow that. But this is a great way for you to, buy things and not have to actually spend money for it. Well, guess what? That's putting more money in your pocket. All right. So Discover It card, highly recommend it. 2% cash back. That I would recommend as your first secured credit card. That's going to take you to the next level. Now remember, with what we're doing, we're not going to accumulate any debt. We don't want to pay. This is your free method to better credit. We're not going to be paying any interest. We don't want to be paying any annual fees. So if you decide to go with a different secured credit card, that's fine. You don't want to go with my recommendation. Look, that's my recommendation. I don't get paid from Discover. You won't find a link. Well, you will find a link below, but it's not an affiliate link, so I'm not getting paid by them. I'm just referring that to you because it's literally what I would consider the best secured credit card on the market right now. But you want to accumulate no debt. This is all free. So if you start to accumulate debt, you're going to throw this whole free thing out of whack. And that's not on me, that's on you at this point. So remember, the key here is a lot of people think you have to have rolling debt. You don't. You don't have to have rolling debt to build up your credit. Not necessary. So now the next choice you want to make is which one of those unsecured credit cards you want to get into. Now, I would highly recommend going to check out somebody like the Points Guy once you're here. Has a great list of credit cards you can choose from, all the perks that are available, all the different rewards, all the different rewards you get from spending money on them, all the different sign-up rewards, all that stuff. So go and pick and choose which you think is going to work best for your needs. And then what you're going to do is you're going to hit that like button, because that like button helps me out, and hopefully this information has been helping you out, so it's a little fair trade. All right, so now you've got your first secured credit card, you're starting to earn some points, you're going to have that for a couple of months. Now we can get into what's called credit card churning. Now that you've generated some good credit, you've got all these different offers, we're going to look at credit card churning. There's a ton of videos out there on credit card churning. You're probably going to get one from me. I don't have one right now, but you'll get one from me later. Essentially, what credit card churning is, you have a credit card. There are specific bonuses that you get, and there's going to be specific barriers on how you get those bonuses. So what you're going to do is you're going to start looking at those bonuses, and you're going to start seeing, okay, what do I have to do to get those bonuses? Maybe it's spend an X amount of dollars over the course of 3 months. If you spend that much money, then what you do is you apply for that card. For the next 3 months, everything you spend goes on that card. Now make sure that these don't have annual fees. If they do, you're going to have to look at if the perks are worth it or not, stuff like that. But you're just going to keep jumping from credit card to credit card, and you're going to keep working your way up to get to those different rewards. And at the same time, you're going to be building your credit. Because what's going to happen is you're going to have what's called a debt utilization ratio. A debt utilization ratio says that I have all of this ability to run up debt to, let's say, $50,000. But I only utilize maybe $3,000 or $4,000 every single month. Now, unfortunately, when you charge anything on those cards, no matter what, that goes to your debt utilization ratio, whether you pay it off at the end of the month or not. But as long as you stay under 30% debt utilization ratio, you're not going to have any negative on your credit. Now, you will have a negative on your credit every single time your credit gets run. And every single time you do apply for one of these credit cards, your credit is going to get run. But understand that the benefits are going to outweigh the detriments there. So don't worry too much about it. It's a small little ding, couple points, not very much. And they fall off after a year. So not really a big deal. Now, guys, if you haven't already, don't forget to hit that like button. Really does help out with the Google algorithm. So I really do appreciate that. Now, I told you there's going to be a bonus. So here's the bonus. Parents, if you have children, your child is in their mid-teens, say 15, 16 years old. You can start them off on their journey to financial freedom and good credit by setting them up as what's called an authorized user. Now, an authorized user, you don't have to give them access to a card. You can if you'd like to, if you want them just to go ahead and, start paying for their gas or paying for, the occasional meal with their friends. You can give them a card to do that. But they'll start actually piggybacking off of your good credit. Look, if you have crappy credit, don't put your kid on there and ruin their credit. But hopefully you have good credit. Put them on there. Let them start to build up their credit. And once they turn 18, they don't have to get a secured credit card. They don't have to come up with that money. They can go right into the unsecured credit card level and be way ahead of the game. Now, if you're already over 18 and you're looking to get a jump on your credit, you can go and ask your parents, hey, mom, dad, can you, if they have good credit, of course, can you put me on one of your credit cards as an authorized user, just so I can build credit over the course of the next months? Because what that's going to do is it's going to piggyback off of their good credit. Then if you've got your unsecured credit at the same time, it's going to help you build your credit much faster. Now, look, building your credit is so important. Getting the good rates on those loans. If you have the lower credit score, trust me, having a couple of points here or there on a loan may not seem like a lot, but it adds up. And that's money that you're not putting in your pocket, you're not putting in the bank, you're not putting into other investments. So take this serious, put yourself in a good position to have good credit, build your credit up, and make sure you're in this for the long game. Now, once again, nothing I said here should cost you a dime. Everything is completely free. So what do you have to lose? It doesn't cost you anything. So hope you guys enjoyed this video. If you did, go ahead and hit that like button. And if you really enjoy this video, you want to be notified every single time we come out with a new video, make sure you hit that subscribe button and hit that little bell notification icon. Till next time, I hope you have a great rest of your day, and we'll see you soon.